Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the start of this week. The Australian dollar bears on Friday took the challenge lower and crushed the support at 72.0515, which was the objective, and posted a fresh low of 71.75, which is where we are quite close to at the moment. With further trade tensions seen this week, could see the pair slide even lower, with a broader target now exposed towards a region of 69.4080. Looking ahead, apart from the US-China trade relations heightening, we also have plenty of key economic data for this week, with today being the Australian data for retail sales and company operating profits. Tomorrow is the Reserve Bank of Australia, which will announce its benchmark interest rate and publish a rate statement which outlines economic conditions and factors affecting the monetary policy. However, there could be a little mention that last week we did get one of the major banks rising its interest rate. So this may excite some, but maybe not for others. And then on Friday, to round up for the week, we have the non-farm payrolls. Along with that, we also have the unemployment, and also we do have the average hourly earnings. So looking ahead, as I mentioned, immediate support is at 71.4060. Now a break beneath there would initiate the move down to the 69 objective. Selling to rallies towards 72.35 to 65. Well, the euro clearly backing away from this 117 area, posted an outside range day and sold off even further to confirm this negative signal. With the outlook very much set up for a bear phase into this week, could see a move sub 115.60 to 114.90 to 114.15, with any advances towards 116.55 to fail. Therefore, should see initial resistance somewhere still around the 117 area. The dollar yen has hardly moved and quite surprisingly consolidates. Now, do take note that the support that was around 110 from the highs of 110 is lowered down to 110.0525. But we're still, if you're trading from a long, you can either lower your stop losses beneath 110.85 or down towards 65 or sub 110.05 according to your risk portfolio. As you can see, though, the RSI has broken down along with the stochastic, and the MACD is weakening, so I'm not overly bullish while we consolidate. Immediate target comes in at 110.65, and as I mentioned, to 110.0525. Short-term resistance at 111.40. The pound is backing away from that resistance of the downtrend at 130.4060, and now posting a weaker close this morning, does look towards the region of 129.10 as minor, and then lower towards the region of 128.45.55. A break beneath there would give further scope to the downside, so do keep that in mind. But the technical implications is not as favourable as it was 3 days ago. Moving on to gold, the outlook is still questionable whether the market can rebound. At level of 98 is being worn away very quickly this morning, with the next support seen at 92. A break beneath there would negate any bullish implication and instead turn the focus back towards the downside. What is putting a little bit of pressure is the fact is that the Fed is expected to hike rates this month. Therefore, could see a bit of pressure as the dollar starts to support in terms of a bull case. Rounding off with oil, well, the market isn't really pushing through this 70 level. I'm a little bit skeptical about this recent rally. Therefore, I do expect to see the market turn away from 70. But there's still a bit of work to do to the downside. We need to get through 68.5 and even probably a little bit lower to support the MACD. Nevertheless, the market for the last 3 days has been questioning this level, and it may back away further, so do keep an eye on that. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.